Good morning, traders, and welcome to our video update for Wednesday. What is it? It is the 9th of October. Okay, now what we're going to do this morning is have a look at a trade opportunity on the US dollar against the Canadian dollar. I don't think this is a bad one. I think this is actually worth having a look at because it's using the RSI indicator down here, and you can see here on the daily chart that we do indeed have a nice big bullish green candle after a decent pullback, and we do actually see here that the indicator has closed above, or is about to close this morning. At this point I anticipate it will close. It's 54 right now. It's got to close above 50, this dotted line here, and in this being the case, this would give you a long opportunity on the US dollar against the Canadian dollar. Now I appreciate the fundamental directional view has been switched to short on US dollar, but that's only against the yen and the Swiss franc. As far as the Aussie, the Canadian, the Kiwi dollars go, I anticipate the US dollar is probably going to strengthen in the next few days or the next week or so, right up until the last minute when they do this debt ceiling deal, if they do actually indeed do it. If they don't do it, it would even exacerbate the move higher on the US dollar against much smaller illiquid currencies like the Kiwi, the Canadian, and the Aussie, and that would of course send this currency higher. So today I want you to have a look at it. Watch it at 10 o'clock, which would be 11 o'clock Sydney time, Melbourne time, because if we get this indicator closing above, what we're going to see is it trigger a long position based on Gary's strategy that he showed you in Sydney. It's a very process-driven trade. What you would be doing, the low for the day was 103.06, so your stop would be at 102.96, so underneath this candle right here, about 10 pips, and whatever that is in distance, in pips, your profit target should be at least double that. So have a look at that one today. I'll show you another one here that's actually worked out rather nicely in the last few days. Where is it? The pound. Where was it? Let me find it here. The pound caddy. Here, right here. You can see here that the indicator came back underneath the 50, and the pound being the one that we want to buy as a long fundamental directional view at the moment. You can see that it's closed back above, which was right here on this day right here, which was the 6th of the month, and over the last couple of days it's just rallied up about 150 pips. So anyone trading the strategy based on the fundamental directional view on this particular pair, you would be doing rather nicely right now. So the one that I just referenced a little while ago is USD Caddy. If economic uncertainty continues, at least it's still got a week to run until the 17th, which is next Thursday, a little over a week. So, you know, I genuinely believe, and it's only my view, I might be wrong, and I'm wrong plenty of times, that they will do a deal at the last minute, at the very last hour, but they'll try and hold out until that point. What's the point in doing a deal now when you might make the other guy nervous and he might fold and you get what you want? So I think that may push the US dollar higher against the caddy, the euro, the pound, and those safety currencies, the Swissy and the yen. I would anticipate the US dollar to weaken. So make sure you read this morning's Gold Rock Insider Report. There's a lot of very valuable information there for you. Have a great day. I'll see you on Friday.